What's up, guys? This video is going to be a new PDF file we'll be talking about. This one is more advanced market structure, more advanced in liquidity, and there's more things that you need to know about it. So I'm giving you guys more information you need to know every single time. So to begin, hello. First of all, I want to thank you for the trust that you placed and bought. This is what you will find in this book. Is a summary of my long experience with the market, and that there is a secret in the correct analysis of the market to become a professional trader. But on the contrary, strategy represents only 10% of this market and it's nothing. The most important thing that you must understand and focus on is the psychology and risk management. I know that you will not apply these words, but just try to do that. An impressive result will be formed. I hope to be the person who it will change your life for the better. It will be an honor for me. And I will be happy about it. Why we treat the alcohol concept. So this is like the content, right? We have liquidity, daily cycle. HTF means higher time frame cycle. Number 3, we have money transfer, algo market structure, premium and discount. These are advanced market structure and price action. 6, efficient price action, inefficient price action. 7, other blocks, breaker block, rejection block. 8, a TDI indicator. 9, top-down analysis. 10, 1-minute mastery, ping pong. Right? So why we trade the algo concept? The forex market is the largest market in the world in terms of liquidity, and of course, there is supply and demand in the market. But what most traders do not know is that the market is not subject to the laws of supply and demand. Why? Because there are those who manipulate prices, banks and huge financial institutions in the world also. So you will not profit because you cannot explain these manipulations and believe that classic patterns work and all you have to do is apply them. But this is not true because the classical patterns and their logic is based on the fact that they are formed due to supply and demand, the psychology of investors. It was old, but technology has now developed, and there are ways to store data of investors. And for novice traders, as beginner traders, this data is owned by central bank, which in turn provides it to the hedge funds and the bank institutions. When you buy, he will sell, and when you sell, he will buy, because he knows in advance where you bought and where you sold. And this is the basics on matter what you try, he will enter against you. Remember, because he simply has something that you don't have. And when you get your liquidity, I spoke about the forex market. It is the largest market in the world in terms of liquidity. But this talk applies to all other markets. Summary: what have we understood so far? Why beginner strategies don't work? There are price manipulations, and the reason this manipulation is liquidity. Why do the laws of supply and demand not work? Our goal objectives. First, induce traders to take positions. Create panic and fear to get traders to think irrationally. Hit the stop loss and clear the orders. Force traders into margin trouble and pocket the money. Why? When you have liquidity. Liquidity is the most important thing in the market. Many SM traders really believe that they understand what is liquidity, In fact, they don't understand it. Liquidity is what makes the market move, not not of supply and demand, rather the liquidity because it's a market that moves based on price manipulations. And to be there, price manipulations in order to obtain liquidity. After you understand why liquidity is important, let's move to the most powerful stage, which is how do we know where the liquidity is in the chart? Well, first you have to know something. We don't know where the liquidity is because we don't have the data that the central bank has. We can only expect where liquidity can be found. There are potential places where liquidity is very large and probabilistic places where liquidity is weak. You have to know that every top and bottom in the market is liquidity. But to know whether this is important liquidity or not, you must understand higher time frame liquidity is not the same as lower time frame liquidity because higher time frames they get liquidity. Therefore, liquidity is more, and the more we go down, the smaller time frame, the more liquidity will be weak. Therefore, we divide liquidity and it's important into three types: major liquidity, medium liquidity, and minor liquidity. Major liquidity, previous monthly highs and lows, previous daily highs and lows, previous weekly highs and lows, previous daily highs and lows, structural swings and structural lows. There are time frames. Example, where's liquidity here and all these highs and lows is liquidity actually. So for me, I can see liquidity above here. I think liquidity is here as well. Probably one, two, three, four, five. Okay, we have one, two, three, four, five. So now liquidity here, but it's been taken out. So now liquidity here, it's been taken out. You know, after it takes a liquidity price, it reverses. Well, it's not that simple. I know that you are wondering how we will know if the price will be reversed or not. Forget this equation because you will understand it later. To finish reading this book, now I just want you to pay attention with me and understand that after the price takes important liquidity, important liquidity means that there's a lot of money there enough for the price to make a big movement because we are in a monthly chart. It will reverse and we call that trap, you know. So major liquidity, major move. So this monthly time frame, you can see there's liquidity here, liquidity down here. As the market keep moving, it try to take the old liquidity. This out this old liquidity. Now this one take care of this old liquidity. So and this one's take care of this old liquidity up here. Get me? And the market structure, you can see market structure just happening to yourself. Taking on the liquidity, breaking this liquidity as well here. You can take an entry from here. Yeah. Structural high. So we have liquidity above here, structural high, you know. Then we have liquidity down here as well. It's a double top, and with double top is a liquidity above. So you just want to get entry here. So now example as well, previous weekly high and previous monthly high. So you can see the previous weekly low. So previous monthly high. You can see previous monthly high. And this week, take out this liquidity from this point. It was a proper entry in the market. So PDH is previous daily high. So you can understand this by all this. Get me? So medium liquidity, right? You can see medium liquidity. Let's check what's medium liquidity. Let's say medium liquidity, structural highs and lows on the hourly chart. So it's hourly chart. We're looking at the structural highs and lows, right? This is a low, right? High, low, high, high. Slow liquidity going down, take out this liquidity, you know, liquidity above here. This liquidity is strong liquidity, double top. But this one are ones that people cannot actually notice about it except if you're not a novice trader, if you know what I mean. So see what retail traders see when they open the chart. So they see liquidity here, liquidity. You know, retail traders beautiful breakout. Let's take an ASL. They are good trader. The beautiful fake out trap. Let's take a buy after the grab and the retail trader stop losses. False flag. This is a bearish flag, right? So people think that after this bearish flag was going to keep going down. Yeah, but you want to see what's going to happen next. See what happened. We think it's a bearish flag. Gonna keep going down, but it just came down here, give us a entry, more like a entry to get up, to go into the top, going bullish. But any normal share of thing is a flag, a bearish flag gonna continue going down. Retail support and resistance. You can see this. Most times they call this order blocks. I'm not going to say it because I never got there yet, but people call it other blocks or people can call it an engulfing candle. Let's say it's a bullish engulfing candle because the bullish candle is bigger than the bearish candle. So I call it bullish, you can call it other block, and these candles actually give us an indication, it's like an indication or like a, how they call this, like when you have setups and give us like a indication, like one of the points of which I can take to enter my trade, if you get what I mean. Yeah. You see how much pips after price grab a medium liquidity. See, so the pips. Manual liquidity. Manual liquidity, you can find it on the minutes, 30 minutes, 50 minutes, 1 minute also. We see this liquidity on the intraday scalping also and confirmation entry. So the difference between liquidity is a difference in movement. If you want 20 pips per day, minor enough. If you want a lot of pips, I need to focus on medium and major liquidity, right? So it depends on which trader you want to be, a swing trader or scalper that trader. Choose the liquidity you want to choose. Summary: after price grab liquidity, they need to move. So, you know, like after price come and grab the liquidity above this level, or come and grab this liquidity above this level, this dollars is showing this liquidity. So when price comes right up here and just take a tip of the liquidity, it's a reversal. No, start reversing, right? Comes here, do the same thing again. Have a liquidity above here, right? But came back down. Sometimes some currencies are very kind of different, Let's say for example, your USD can make movements like this: one, two, three, right? Before it goes down. Like GDP USD can just make one movement up to the liquidity and just move down. So it all depends on what currency pair actually choosing to trade with, right? Monthly liquidity, weekly liquidity, daily liquidity, hourly liquidity, minute liquidity, inducement. Inducement is just a liquidity close down OB, right? I want to share you something. I want to go on a live channel and explain some liquidity. Get me? Because there's no point of talking about this and not having examples to share with, if you get me. So we can see on the monthly time frame, this is March. March is pushing up. This was February and this was January or December. So also you can think that the market is going to go up, right? But don't forget that we have a big indication here, right? And we have an engulfing here as well, an engulfing here. And this week is liquidity as well, Don't get it twisted because it's a week. This is liquidity as well. And they say price goes where liquidity is, you know, but this is a monthly time frame and we need to find something good before you pick on that, if you know what I mean. Yeah, so now liquidity here as well, a monthly time frame. Just picking this out just in case because liquidity in a higher time frame is more better than the lower time frame, right? That what BGFI say. And okay, it's liquidity as well, yeah. It's liquidity here as well. But on daily time frame, you see that we have a bullish candle, right? And this bullish candle break structure. What do I mean by break structure? Okay, see what's going on here. There was a market structure going on here, right? So market structure was going on here. Here you can see the liquidity here. Market structure was going on here, if you get me. So this market has come and break the structure, right? So you might come and break this structure as well here, but this one is so important. Market structure has been broken. It's like they call it like change of character. If you get what I mean, right? So let me cancel this one. Right, change of character is happening here. So I might be expecting something like this. Yeah, keep going up. Or it might just, I mean, the market might just come like this. So there are many ways the market can do what it wants to do to play out the market structure. But for me, I'm looking at this market going downward for some time before going back up on a 4 hour time frame right now, right? And I'll show you the liquidity that is found in the market and liquidity on a higher time frame as well. I'm a swing trader, so I won't try to go for the lower time frames. But it's good to find entries in lower time frames if you get what I mean, right? You was a accumulation here before the distribution here, and distribution causes like a trend. One, two, three. It might keep going up, it might keep going down. It's what it is. The market knows what it's doing. So that's why the story about the Agu concept. If you like this video, please like, comment, and subscribe. I'll be so grateful. Thanks. Peace.